Hey everyone, and welcome to today's Explainer. I'm absolutely thrilled to have you here. If you're the kind of focused learner who just loves seeing how the massive gears of the global economy actually turn, well, you are in the exact right place. We're looking at June 17th, 2026. And honestly, today's market is just a perfect masterclass in what we call the ripple effect. We're going to see exactly how massive, world-shifting events out there create these undeniable ripples that eventually crash right into our own local portfolios. To show you just how massive those waves can be, check this out. 19%. That is the absolutely staggering surge IDBI Bank stock saw today. It touched a day high of 92 rupees and 25 paise, basically right near its upper circuit limit. And look, this wasn't just some quiet little bump. We're talking extraordinary volumes here. Around 20 core shares traded on the NSE alone. It really perfectly sets the stage for the high-energy, highly reactive market environment we're analyzing today. Everyone is hunting for the next big move, and today it was speculation around the government's 80,000 core FY27 divestment pipeline that just completely ignited this stock. All right, let's jump right into Section 1, Global Forces Driving Markets. So to really understand today's local surges and, the Nifty actually closing flat to positive at 24,043, we have to look at this incredible tug of war happening on a global scale. It's like a giant puzzle. On one side, we've got this massive global tailwind. The US-Iran peace deal is actively pushing crude oil prices down. But right here at home, we're facing a really severe local headwind. The southwest monsoon has pretty much stalled out after hitting Kerala, which leaves India looking at a 35% national rainfall deficit. So you've got cheap global energy trying to lift the market higher, while local anxieties about agriculture and rural demand are actively trying to pull it back down.
Let's unpack that global tailwind first, because it's a big one. Brent crude has actually dropped to a 3-month low, sitting right there at $78.44 a barrel. And here's why that matters. Cheaper energy is basically the ultimate catalyst for the Indian economy, simply because we import such a massive amount of our oil. When that price drops, it helps contain our inflation, it shores up our external balances, and it gives a huge boost to corporate earnings. And we literally saw the immediate ripple effect of this today. The Indian rupee actually appreciated by 31 paise, strengthening to 94.29 against the US dollar in early trade.
But, oil isn't the only global force at work here. Think about this for a second. Why does Kevin Warsh's Federal Reserve, a central bank sitting halfway across the world, matter so much for India's market today? Well, it's because the US Fed effectively controls the spigot for global liquidity. They dictate the flow of foreign institutional investments, or FIIs, that pour into emerging markets exactly like ours. So today, the Fed held interest rates steady at 3.50 to 3.75%. Now, no surprise there, markets had already priced in a 97% probability of them holding. But the real story is their easing bias. Markets are obsessively watching the Fed's dot plot and their commentary right now, trying to figure out if they're going to formally end their 2026 rate cut cycle. Because if they signal a hawkish stance and pull back that easing bias, well, the US dollar strengthens, and we could easily see FIIs pulling their money straight out of India. But for today, stability over there prevented any panic selling over here, which kept our broad markets nicely in the green.
Okay, let's bring it back home. Section 2, Nifty and sector surges. Hands down, one of the best domestic stories today comes straight from the Defense Ministry. They just announced that India's FY26 defense production hit an absolute record of 1.78 lakh crore rupees. I mean, that is a massive 15.6% year-on-year growth. And let me tell you, the market rewarded that data instantly. Defense stocks were absolutely soaring today. Paris Defense skyrocketed by over 12%. MTR Technologies jumped over 7%. Even the big stalwarts like HAL and GRSE locked in really solid gains of over 3%. Now, remember that 35% monsoon deficit we talked about? Well, here's where it gets a little ironic. While a stalled monsoon is obviously tough news for agriculture, it also means this brutal hot summer season is sticking around longer. And that is keeping AC stocks heating up. Companies like Blue Star jumped over 4.5% today, and Voltus rose nearly 3%. Actually, this entire dynamic pushed the broader Nifty Consumer Durables Index to its 4th straight session of gains, climbing another 1.67% today alone. Talk about finding a silver lining, right? Moving right along to Section 3, Top Stock Movers Today. Let's rapidly walk through some of the most incredible individual stories making headlines today. First up, Trent.
They were the top Nifty 50 gainer today, up a full 5% to over 3,041 rupees. This surge was totally fueled by a Citi note that highlighted their incredibly resilient demand and the massive, massive growth potential of Zudio. We already touched on IDBI Bank's explosive 19% surge thanks to all that divestment speculation. And finally, BSE Limited. Their shares actually tumbled by 4.26% today. Why the drop? Well, their massive rival, the NSE, is gearing up to file its DRHP for an absolute monster of an IPO. We're talking 21,000 to 25,000 crore rupees. That's a pure offer for sale structure that will list on the BSE before December. It creates a direct market comparable, so what we're seeing with BSE stock today is just a textbook sell the news reaction.
All right, section 4. Let's get into our spotlight analysis on fractal analytics. We are anchoring our deep dive right here with Axis Direct's official buy rating. They've stamped a target price of 1,055 rupees on Fractal, which implies a very solid 10% upside potential from where it sits right now. But look, as focused learners, we don't just blindly look at a target price, right? We want to know the why behind the rating. Let's get into it. So the stock is currently sitting at 961 rupees, eyeing that 1,055 target. Crucially, Fractal is taking 5 to 7% of its revenue and plowing it right back into R&D every single year. That is a heavy, heavy commitment to innovation, specifically when it comes to building proprietary AI platforms like Cogenic. And because of this operational efficiency, plus their massive addressable market, they command a serious premium valuation over their traditional IT peers. We're talking an estimated FY28 PE multiple of 31x.
Now, why are analysts actually willing to pay that premium? A few key reasons. First off, a whopping 98% of their revenue is annuity-led from existing accounts. 98%. That is an incredibly stable, totally predictable foundation to build on. But it gets even better. They are actively pivoting their business model away from traditional input-based work and moving toward high-margin outcome and license-based models. They expect this to rise from 40% to 60% of their business over the next couple of years. And get this, license revenues alone deliver 25 to 30% higher gross margins. By leading enterprise AI adoption across massive global sectors like healthcare, finance, and consumer goods, they are fundamentally setting themselves up for just massive long-term profit expansion.
So what does this all mean for us? We've got these strong global macro tailwinds with cheaper oil, and global liquidity is holding steady for now thanks to the Fed. But coming up right around the corner is the Q1 FY27 earnings season. Giants like TCS and Infosys are about to report. Will their commentary on deal flows and AI disruption actually validate all this current market optimism? How are these macro forces going to collide with hard, real-world corporate earnings? That, my friends, is the exact question you should be pondering after today's explainer. Thank you so much for joining me to break all these trends down. I had a blast, and I absolutely cannot wait to explore the next big market shifts with you.